Yo, what's up? What is the difference between common stock and preferred stock? Lies in ownership rights, dividend payments, and priority in case of company liquidation. Now, what is company liquidation? All right, here go two examples. The first definition is for investors. Liquidating stock equals selling your shares. Why it happens: investors may liquidate for various reasons: to take profits, cut losses, rebalance their portfolio, or need cash. Example: if you own 100 shares of Apple and sell them on the stock market, you've liquidated your position. Number two, for companies, corporate context. Company liquidation equals when a business shuts down and sells all its assets to pay off debts. Impact on shareholders: the company's assets are sold, debts and creditors are paid first. Shareholders oftentimes are the last in line, and a lot of times they don't get paid anything, especially if the company owes more debts than it has assets. All right, now let's get to the definition, the differences between common stock and preferred stock. So common stock equals standard ownership in a company. You get rights, voting rights, typically one vote per share for board elections and corporate policies. Dividends paid only if the company decides to pay dividends, but it's not guaranteed. Risk and reward: higher potential for price appreciation, but more risky if the company fails. Liquidation priority: paid after preferred shareholders, bondholders, and creditors. Think of it as higher growth potential, more control, but less security. Now, what is preferred stock? The definition is a hybrid between a stock and a bond. You get rights, no or limited voting rights. Fixed dividends, usually paid regularly and before common stockholders get anything. What are the risks and rewards? More stable income like a bond, less upside potential than common stock. Liquidation priority: paid before common shareholders but after debt holders. Think of it like this: less growth, more income stability, and higher payout priority. All right, so I'm gonna give y'all a little quick summary right quick. So with common stock, you have voting rights. Dividends are variable but not guaranteed. Price growth, you have a higher chance of price growth. Priority and liquidation is last, meaning if the company shut down, if they have any money to pay the shareholders, you'll get paid last. As far as risk, you have a higher risk compared to preferred stock. Now with preferred stock, when it comes to voting rights, you usually don't get any voting rights. When it comes to dividends for preferred stock, it's fixed or usually guaranteed. For price growth for preferred stock, it's a lower potential. Priority and liquidation for preferred stock is before common stock. And then as far as overall risk, lower. So these just definitions and basically the difference between common stock, liquidation, and preferred stock.